Let me now bring on board Amur Lakshminarayanan, Managing Director and CEO of Tata Communication. Lakshmi, good morning. Thank you for joining us. It's been a while we've not interacted with you. So, Lakshmi, bulk of your growth seems to be coming from inorganic switch acquisition. Break down the quarter for us. How much of the growth for Q2 was organic and how much was inorganic?
Yeah, organic growth, overall year on year, if I look at, Q2, we have grown 10%. In our business, I would, put more emphasis on how we are doing year on year rather than a quarter on quarter. So quarter on quarter, the data growth is 0.7%. But I think the overall on the overall aspect, we have grown 10%, which is very, very commendable, I would say. Also, given that the macro conditions at the moment are not that favorable, so the decisions are getting delayed. So last quarter, I said that some of the deal closing has got pushed out, and that's playing out. But despite all of that, we are still showing a 10% year-on-year growth. I think is still a good performance.
Morning. So the 10% year-on-year organic growth has been clocked in Q2, but in the second half, do you think that this growth will accelerate or will it slow down?
Our aspirations to grow was much faster. Having said that, the macro conditions are what they are. So we are going to put our head down, make sure that we continue to do all the right things. We invested in our products and we continue to invest in our products. We have acquired Switch, where I said the integration, the teams are doing an excellent job. And Kaleryra, we have had an accelerated closure and we will be integrating that. So, we will put our heads down, make sure now the execution is sharp. And whenever the market is ready, we will be prepared, is what I can say. So I don't want to read out and look out for the H2, how it would be. But overall, we think we would still do a double-digit growth. And with the inorganic coming in, our growth would be faster than that.
So Lakshmi, on the margins, we've seen it slide from 26, I beg your pardon, to sub 21%. Now that you have prepared us for this drop on account of acquisition impact, when do you see the recovery in margins? Because that's a critical point which markets would mull over.
If we have to grow, if you look at our trajectory in the first 3 years, we got our basics right. From a 16%, we got our EBITDA up to the levels we want. We got our balance sheet strengthened. And we said that we have to invest and we want to invest so that we can grow. And in order to grow, we have to make those investments. And that is what exactly that we have done. And as a result of those investments, the people additions that we did in both in the front end of the market and sales, as well as in the products and solutions and delivery and everything, the cost was expected to go up, and it's in line with what we wanted to do. So this is not a surprise. And I explained even last quarter when the margins came down. That is one major factor for that coming down. The second factor, as I had explained previously as well, is the mix of business. We were less than 30% of digital portfolio, and we called out that we want to make that to 50% going forward. And this quarter, we will be 36%. But as the digital portfolio grows, the digital portfolio has lesser net revenue margin, and a lot of our digital portfolio were not EBITDA positive, and therefore it has that impact. But we do have a glide path for all the products to improve from here on. But we have to make those investments. Otherwise, we would be caught in a catch-22 situation, which we were some time ago, that because of lack of investments, we can't grow. And either the choice is that we produce good margins and show a mediocre growth, or we want to invest into new products and have an aspiration for faster growth.
Sure, but the question is that whether or not this phase of investment is going to continue for some more quarters. And I want to understand from you whether or not it's going to turn worse before it gets better.
We said that we would Post-integration, Kaleryra from a negative EBITDA, we would get to an EBITDA neutral in about a year's time. And we would make it EBITDA positive and get it closer to a double digit in the medium term. And as we do that, naturally our overall margins will also go up. But in the short term, yes, there will be that effect of the dilution. So, I just want to explain another factor. When you look at the overall margin that you see, and if you unpeel the layer of what is Tata Comm's, what I would say the core. So leaving out the switch, for example, the margin dilution from last quarter is only 40 basis points, which is largely because of the mix change as we grow the digital business, as well as the M&A related expenses of Kaleryra. Right? So that is in the range of what we want to do. But then if I stack up the switch, which has diluted the margin a bit, as well as the dilution that we have in our subsidiaries, which has been a drag from a margin perspective, and those are the ones that have pulled us down. But the core Tata Comm business are still in that range, and the dilution hasn't been as much, and it's as per the plan. Whatever dilution is happening is because of the mix change that we explained earlier.
If you want to prepare us for how much margin pressure we should brace ourselves for, markets, they don't like surprises. So if you have to, let's say, give a sense or indication, how would you summarize it?
I don't want to spell out exactly that, but the math of that would be available because the numbers of Kaleryra were public. But we are working very hard in other areas to see how we can better that. But yeah, I think there would be some pressure in the short term as we integrate all of this. But the only assurance I can give is the core business will continue to be healthy. And these investments, as they play out, they will have that effect of going down, but we will bring it back. And that's where the value creation will happen, right? So in terms of as we bring these businesses back to EBITDA neutral and eventually to a reasonable EBITDA margin, which we call out in the case of Kaleryra to be a double digit. And similarly in the switch, when we move that to a double digit, we would have a strong case and a strong base once again, right? Because we moved this company from a 16% to what it is today. But we have to make those investments, and those investments are made for long-term value creation.
All right, good to have you on board. Thank you so much for giving us that clarity.